Hi, I'm Jimmy. In this video, we're looking at the debt of the United States, and is that government debt a time bomb waiting to go off and cripple the US economy? Okay, let's jump right in. As many of us may realize, the debt that the United States government is taking on is at historic levels. And when we look at this chart going back before the financial crisis, well, we can see that back then, US debt started in the $8 trillion range. And in the early days leading up to the financial crisis, US debt was climbing, but at a fairly reasonable pace. But then when the financial crash happened in 2008 and 2009, well, the US government started stimulating the economy and understandably started increasing that debt at a faster pace. Now, it can be argued that the debt incurred from the financial crash was logical and perhaps even necessary. Even Warren Buffett has come out and said that the drastic steps that the US government took back when the financial crash happened was crucial to the stability of the financial system and clearly the broader economy. But our question might be, when was enough enough? This additional debt continues to pile up at a fairly quick pace over the next decade as the stock market went on a fairly impressive decade-long run, which ultimately brings us to the economy today. We could see another large spike just recently during 2020 as the US economy has needed stimulus thanks to the broad economic shutdown all over the world. And obviously, we can look back and say, perhaps they ramped up too much debt leading up to this, leaving us having to take on very extravagant levels at this point. Since now, frankly, the debt is needed, just like it was needed during the financial crisis. Was it needed as much in, let's say, 2012 or 2017 or whatever year it was during the past decade-long run? Probably less needed than it is today. Okay, that being said, what does this mean for investors for, let's say, the next 10 years? Well, one of our first more logical thoughts might be, is this simply too much debt? And I do think it's somewhat crazy that so much debt has fueled the growth of the United States and many other countries around the world. And I know this might be a bit controversial, but I'm not sure that we're at the too much debt point just yet. With the United States in particular, debt is a very relative thing. Yes, debt is at historic highs, but the US economy, well, let's say at the end of 2019, was larger than it's ever been in history. Now, if we were to look at something like debt relative to GDP, well, the country now has more debt than the value of the overall country. And this is very true. But this isn't the first time this has happened. After World War II, debt to GDP also crossed the 100% level, meaning that the country had more debt than they had GDP. Now, this chart came from the Congressional Budget Office of the US government. And clearly, this hasn't been updated for the multi-trillion-dollar bailout that recently took place from the coronavirus. But either way, we could see that the US, back after World War II, was up near this level. And then over time, over let's say the next 30 years or so, they gradually controlled GDP or debt as GDP grew faster than debt. So the number gradually got better over the next few decades. Now, for us investors, I've seen different comments and I've heard different people talking about if the United States government can even afford to pay off this debt. And interestingly, Warren Buffett was asked this very question just a few weeks ago. And the question was, is there any risk of the US defaulting on its debt given the expanding debt of the US government? And his answer is impressively direct. Here's what he had to say.
No. If you print bonds in your own currency, what happens to the currency is it can be a question, but you don't default. And the United States has been smart enough, and people have trusted us enough to issue its debt in its own currency. And Argentina is now having a problem because the debt isn't in their own currency, and lots of countries have had that problem, and lots of countries will have that problem in the future. It is very painful to owe money in somebody else's currency, but if I could issue a currency, Buffett bucks, and I had a printing press, and I could borrow money, and in that, I would never default.
Okay, so I think that fairly directly explains that it's somewhat unlikely that the debt of the US government is going to slow down the economy. Now, debt like student loan debt or credit card debt, they're a very different story since the borrowers of student loans and credit cards cannot print money, so clearly that could be a problem. And from a broader economic perspective for us investors, and Buffett brought out in that clip, the real question is, what's going to happen to the US dollar relative to other currencies? That is something that could affect us investors over the next decade. And when we look at the US dollar index, well, we can see that the dollar has actually increased from just a few years ago, even though generally more debt should lead to a weaker currency. But currency is a relative thing, and there are a lot of countries all over the world taking on new debt. So the fact that the US government is doing a multi-trillion-dollar package, a lot of other countries are doing similar bailouts or debt issuance, perhaps not to the same scale, sure, for a smaller amount, but perhaps not a smaller amount on a relative basis, given the size of GDP. America isn't a lone country doing this right now, and if many other countries are also doing it, well, no one country looks significantly better than another country, and currencies aren't broadly affected. They are, but not America's doing it, nobody else is doing it, therefore the American dollar is going to get whacked for it. Now, once again, I'm not saying that debt is not a bad thing. It is. Too much debt can be crippling to a person or a family or a company or even a country if, as Buffett put it, that country doesn't issue debt in their own currency. Now, from an investing standpoint, we might hesitate on perhaps some emerging market countries or emerging market investments, that countries like Argentina that are not issuing debt in their own currency. Those might be a bit risky. They might have more trouble coming out of that debt problem over the long run. Countries like the United States or Great Britain, well, they're likely to have less issue with it. Now, once again, our personal debt level is crucial, and the mindset that we have for acquiring wealth and setting up our own financial independence is so important. In fact, I did a video on the mindset it takes to develop serious wealth. And if you're curious, perhaps that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks. I'll see you in the next video.